Alright guys, welcome back to another video here on the Dividend Doggo Show on YouTube, and I am bringing you into the first weekly portfolio review of 2022. We are ending the first week of January here, and it's been a pretty interesting week, and I did a bunch of little micro buys that I'm going to show you, and we're going to take a look at the portfolio overall so far. Going into the year, we were just shy of $700,000 in the portfolio. We've crossed over that line. It was like 705,000 at one point this week, but then it kind of dipped back down near the end of the week. I thought for sure this week would potentially be a red week due to market sentiment, and it kind of turned around a little bit overall. So we're gonna just take you into a little bit of a deep dive here. You can see that for 1 week, we did have about $200 worth of dividends being earned, and then we had a market gain of about $4,050, which is pretty amazing overall. If every week could do that, it would be an absolutely amazing end of year. But overall, this return is pretty amazing. You can see that the reason I thought that it might end up being a red week is just because the portfolio was kind of all over the place. This was mainly held and propped up by the finance sector for the end of the first week. That is pretty amazing that finance was able to prop up most of the portfolio overall. So looking at that, we have an overall gain percentage. We're just going to dive straight into finance here and take a look. Now, Bank of America had an amazing week. Bank of Ozark also had a very amazing week, and JPM. Hingham, not so much. It was down about 1%. This is the smallest of the finance sector positions that I have. However, these are performing very, very nicely for the first week going into this new year here. And overall, I think that the banking sector is going to get another little pump throughout the interest rates going up. And, this could easily go up a little bit further even. So I kind of expect it to be a little bit up and down. But as interest rates are raised, that means the banks are going to be able to make more money. So it'll be kind of interesting to see how all of that goes. Now, monthly stocks were down. Industrials were up just a little bit. Tech was down 4% this week. Then Coma Money was up, which is mainly off the back of Berkshire Hathaway finally getting a little bit of love and realizing that, they were a little bit undervalued with, their heavy position in Apple and the amount of money that they have coming in. They deserve to be a little bit higher than what they've been lately. I'm pretty happy that I have this position. This isn't a dividend position. This is just one of those that I really wanted to own a chunk of the company. So I love tracking it and seeing what Warren Buffett's doing, and it's just absolutely amazing. SHG ended the week up 1%, which is absolutely amazing. I can't wait to build that up a little bit higher and get that into the $100,000 range. And then utilities was down just slightly, just a smidge for both Duke and Vistra this week. And we do have earnings coming up for Vistra. I believe it's like the 25th of February. So that is going to be exceptionally exciting. I will probably get up at 5 a.m. and listen to the earnings call just to see exactly what's going to go on. They will likely have a dividend raise announcement, and that's kind of going to set the tone and pace for the rest of the year, I think, for Vistra. So I could easily see them going to $24 around the March timeframe. I think they have a little bit of wiggle room to still grow, and I think that they're going to continue to do some buybacks. Like right now, they ended the day up pretty significantly, but for the week they were down just slightly. But at 22.71, this was a screaming buy in February, March of last year. when it had dips all the way down into the like $15-16 range. And I lowered my cost basis down because I had bought up a bunch of shares. My original goal for this position was to get to about 2,000 shares. And obviously, when I saw the stock drop like $7 a share almost, it was scoop up as much as I could. And this has had an amazing bounce back. If I look at 1 year, it's pretty amazing overall how much it's gone up. So I'm excited for the next couple months to see what the earnings calls look like and kind of go from there for utilities. Sorry, I had to cough there. And so healthcare was down just slightly. Nothing to really worry about for the week. AbbVie's doing just fine. This position's amazing to me that it's at 140,000 now. And they're about to cross over their ex-dividend date, I believe, coming up just about a week. Let me double check on that and make sure that's actually correct. Yeah, AbbVie is January 13th. Now, when that crosses over, that's slated to earn $1,466.40 for the AbbVie position for the dividend coming into February. So it'll show up as earned once it passes the X date on the 13th. That's going to be amazing. That position alone is going to boost the portfolio up pretty significantly for earned dividends. You know, that's a hefty chunk, almost $1,500 on that dividend. It's kind of tempting to, let that reinvest a little bit, and that would boost it up over $1,500 per quarter. That is an amazing position. It has just grown and grown and grown. I can't wait to see how their year goes for 2022. So in the consumer pie, this was kind of all over the place. You can see I wanted to talk specifically about a couple things because there's been a bunch of conversations going on in the Discord community for Joseph Carlson's YouTube community. He hosts via Patreon. You can sign up and you can join. A huge group of us are in there, and we talk about stocks all day long, almost every day. And there's been a lot of, sentiment about Costco being at such a high evaluation right now. And it did have a little bit of a pullback this week of 5.5%. So if you've got it on your radar, I would say if you weren't liking it at the prices and the evaluation that it was last week, you probably want to hold off until it's a little bit cheaper. It is an expensive purchase if you're buying it. Home Depot, again, also an expensive purchase. I'm really glad that I have this position up where it is. I'm not really concerned with these positions coming down 5%. If they retrace like 15%, I'd be totally fine with that. And I'll likely start buying them if they, do retrace a bunch. Lowe's is one of those that I'd still like to add a little bit to. Target is another one of those that I'd like to add a little bit more to and I'd like to get Target to about 15K, Lowe's to about 15K, and Costco up into the 20s. So these are positions that while their price to earnings ratio is high right now, you got to look toward the future. Is this company really hurting worth 5%? No, not really. It's probably just a little bit of sentiment shift. And, I think we're good for the long haul on stocks like Costco, Lowe's. Target's done major improvements over the past couple years and just been a phenomenally high performing stock for me. So those are positions that I'm looking to. They're on the radar that I want to add to over time. Mo being up 5% really did prop up the portfolio because it is the largest position for the consumer pie. It's one of my highest yielding dividend stocks currently, right above AbbVie, and has just been a solid little performer. All right, so yeah, as you can see here, the overall position for Mo has grown pretty significantly as far as the gains go, and it's also done very, very well from a dividend perspective. It has consistently just been rolling in the dividends for quite some time and has helped build out several other positions in the portfolio. And it is at, I obviously would not be buying this. I will be rolling the dividend into something else. The ratios in which it's at are just exceptionally high. However, one thing I do want to say about this position is that I'm very comfortable with just leaving this position where it's at in the portfolio and using that income. A huge attraction to this is the dividend payout, and using that to build up other positions that I want to have for the next like 10 to 20 years, allow that to grow very, very well. So that's part of the reason why I've left it the way that it is for quite some time. Now, I want to go back to the overall Home Depot, Costco, Lowe's. I'm going to slowly build those up as I can and kind of continue to raise them up over time. I do feel that the consumer pie is one of my stronger pies as far as companies that are in there, that they're going to do exceptionally well over time and just kind of continue forward. So that being said, that's kind of an overview of how the portfolio went for the week. As you can see, we're in that 700K range now, and that earned dividend income is about to cross over $40,000 for all time in just over 2 years. That's pretty amazing to me, and I'm very, very happy with that. I hope to continue to grow that about 20,000 plus this year. I'm hoping to get to about 22K in earned dividends for 2022. So we'll see how that forward income buys. I do want to jump into what I did this week as far as purchases. There was a ton of talk about BST in the channel and how its dividends are paid. So I wanted to go take a look at my personal history with my dividends and purchases of BST. And if you don't know what BST is, it is basically it's an income fund that is it's focused on doing calls on the stocks that they have purchased, and it pays out in long-term capital gains, which is absolutely phenomenal. Especially if you're in my position where we have a pretty high income. So it basically allows us to avoid a lot of the tax bill around that, and basically keep them as like ordinary style income. So overall, you can see for the past year, you can see this past week, I did a bunch of little buys. A lot of this was off the back of dividend payments that had rolled in with a little bit of extra capital added, only a couple $100 this week. We did have $148.57 from the credit card from M1 Finance. I had done a bunch of spending and bought some gifts for my family from GameStop and used the 10% cash back to do a bunch of stuff like that. So that was a huge additional payment of money that came in from the credit card, and that rolled straight into BST. BST is a monthly payer, and it's going to allow me to compound. I'm just going to keep rolling the BST dividend and a little bit extra every single month that it gets a payment, to get these payments up significantly over time. And I've held this for a pretty significant amount of time here, and you can see that it has paid quite a few dividends, and I want to keep that snowball rolling. This is one that I wouldn't necessarily do, have a huge position in the portfolio, be in this particular stock, but overall you can see that it has performed quite well for me in the all-time portion there. We're looking at, it's a very small position for my portfolio overall, but we're looking at $900 in gains and $320 in dividends, and I've held it actually since the portfolio started, but it was only a $300 position when I started the portfolio, and I nudged that up to about $500, and that was, what was that, September of 2019, and then I nudged it up a bunch in June of 2020, about $1,400, and then it's just kind of taken off and grown from there. So this is one of those that I would do some due diligence on, see if it fits into your portfolio well. It has performed very well historically for me, so I'm going to build this up probably to the $10,000 to $20,000 range and get this into the, a couple percent overall of the total portfolio. I love seeing monthly dividend stocks because they help keep me motivated to continue to invest, and seeing those monthly dividends roll in, just it's fun. It engages me in investing and continuing to push forward with the portfolio. So I'm going to leave you with that note. As always, I think the promotion is still going on for M1 Finance. So if you are starting your investment journey, that would be a great way to get started. I believe they're still offering the $50 payment when you deposit $100 using the link down below in the description. And there's a couple portfolio examples, including the Dividend Doggo portfolio is listed down below in the description. So if you're interested in getting started there, you can definitely check that out and get your investment journey going. And overall, have a safe next week going into mid-January already. I feel like the year's already flying by. I do want to thank every single one of you who has liked, commented, subscribed to the channel, watched all of the videos. I greatly appreciate the growth that the channel has had over the past year, and I appreciate every single one of you. Be safe out there. There's a lot of chaos going on in the world right now, and I will see you for another video very soon.